Shark Tank investor Kevin O'Leary is out with a new investing app. It's called Beanstox. Here to tell us about it is Mr. Wonderful himself, Kevin O'Leary. Kevin, always good to see you. Look, I got to ask, when I heard this, I thought, why? Why did Kevin O'Leary decide to do this? It's already such a pretty crowded space. There are a lot of investing apps out there.
Yeah, I mean, what happened was last March, I have over 56 private investments in pretty well every sector, almost in every geography. And we went to cash flow negative at the beginning of the pandemic when retail shut down. And we immediately, and I worked very hard with my team to get the PPP loans lined up for all my companies. And as you recall, the protocol of those loans is you had to disclose your payroll on Feb 15th vis-a-vis what it was going to be June 30. And so we did a deep dive into payroll, and that's when I found out, which totally freaked me out, that the majority of my employees in their late 20s, early 30s have nothing set aside. They have no investment plan. They have 2 weeks of cash sitting in their accounts. I mean, like, I had no idea, and I did more research. 100 million Americans do not have any investment account, no plan for retirement. So, I mean, that was a real shock for me, and that's what motivated me to get involved in this whole financial literacy move and become my #1 priority for 2021. So, what my original plan was to simply go and endorse one of the robo-investment apps that are out there, and there's many of them. But some of them do trading where you can trade stocks, and others round you up on your credit card, and there's all kinds of good stuff. But none of them invest the way I do. I'm a conservative investor. I have my own philosophy about long-term wealth growth, and I needed something that reflected what I do, and so I had to build it myself from scratch, basically, or at least had a hand in designing it. I worked with a great tech team.
Yeah, if you want it done right, get it done yourself. I know that you're a big lover of dividend-paying companies as well. So talk to me about what you get for the $5 a month subscription fee, because as you know, a lot of these robo-investing apps, aren't charging any fees at all. So give me the elevator pitch. You're used to getting elevator pitches. Give us the elevator pitch on why it's worth the $5 a month.
Well, basically what I did was said, look, I want this to be totally transparent. I want it to be really, really easy to use, because I also made the assumption incorrectly that people actually know how to build a diversified portfolio. They know how to buy a stock, sell a stock. That also is not true for about over 90% of the people that I was worried about. And so I'm really trying to appeal to people that have not started the process of investing something towards their retirement in their 60s. And what I've tried to say is, look, you've got to set aside $100 a week, and the average salary, depending on what region you look at, is between $52,000 and $56,000 a year. So everybody can afford, in my view, to set aside $100. But I said, look, let's make everything transparent. Let's use it in a way that we can use a diversified portfolio of ETFs. We'll charge $5 a month, regardless of how much you put to work. And for this month, I've waived the fee. I just want people to try it and get going. I'm not motivated by making money. I'm motivated by the fact that my own employees have no plan. And if others want to try this, it behooves me to make sure that the people that work in my universe have a strategy to take them out of financial stress. And in March, they were in financial stress, and I want people to have a cushion. And I've got to point something out that I've also learned. There's a difference in the way people think between saving and investing. Putting money into a saving account is a great idea. You need 90 days worth of cash in case of an emergency, but that's not investing. The market over the last 40, 50, 60, 100 years has given you between 6 and 8% a year on the long term. You need to capture that accrual. That's what you're trying to do. So you need to diversify, get a portfolio. I wanted Beanstox to be really easy to use. I mean, I don't care if you've never invested before. I want you to try this app. That's my way of looking at it. And it's the only app on the market that invests the way I do. I'm really conservative, but I'm all about growing that nest egg so that, if you look at it, you put $100 a week aside, and the market does what it's done for the last 80 years, you'll end up with something like $1.2 million to $1.5 million in the bank by the time you're 65. That is a good outcome.
And that's called making your money work for you. But give us two quick, concrete ways people can build wealth over time. I kind of think you ticked through a few of them just now. But if you had to pick two concrete ways, what would you tell them?
Well, first of all, as I've learned, and every investor learns the hard way, you can't time the market. The idea that you know when the market's going to go up and going to go down is impossible. This last 12 months, this incredible 2020 year that we all want to forget about, the majority of the returns came in a handful of days. We had these crazy days when the market was up 8, 9, 10%, 11%. And if you weren't invested, you missed out on that. And so what I tell people is the best strategy is to simply put a set amount aside and average your way into it over a long period of time. But I'll tell you the biggest problem, and I think this is a huge failure in financial literacy. Thank goodness in Florida they're starting to do it. Only 18% of our kids in high school are taught anything about financial literacy by the time they graduate. That's a total fail. You got to understand what a credit card is, what debt is, what investing is, what retirement is, all that stuff. And that's really the mission I'm on, is to really get out there and say, look, if you're 18 years old, you got to start thinking about putting stuff aside at this age. You know, for me to find out my employees had nothing in their late 20s, that's crazy. And that is the whole motivation of Beanstox. I have really worked hard with the design team to make it really easy. I mean really easy. The hard part is getting everybody's discipline in their head to put $100 aside, because there's always some other piece of crap you want to buy that you don't need. When you buy something you don't need a month later, you've killed $100 that could have put to work for you for when you're 65. That's my mission, to explain, look, everybody can cut back on crap they don't need.
If there's nothing else we take away from this interview, I love it. That is so true. You'd be very happy with my 18-year-old. He just opened up an account, very much into making his money work for him.
I'm very happy to hear that. That's exactly what you need to do, because at that age, when they start putting money aside, they start watching it, and that'll work for them for the rest of their lives. I've done the same thing with my daughter and son. I've said, look, this is how it works. Diversification matters. That's the only free, thing you get in life and investing is diversification. And I hope that they'll consider consistently putting aside $100.
Yeah, you're preaching to the choir here, Kevin. But I want to get your thoughts real quick on what's happening in our world and in Washington right now. They're trying to hammer out this stimulus deal. Should the next stimulus package include checks for individual Americans again, do you think?
Actually, I have a lot more clarity now than I had last March and April. I think the best thing to do is exactly that, is to give stimulus checks directly to people and stop funding companies. The market has figured out who the winners and losers are. And the truth is, in my opinion, of the PPP, and I went through that whole process, a third of that money was wasted. What we need to do is take care of people right now, because the economy is going through a massive digitization, a change. One of the reasons that the market is hitting new highs is it's figured out when this pandemic is over that we're going to have a much better economy using all of these tools that we use. The way you and I are talking together today, we don't fly to see buyers anymore in our retail locations. We do it electronically, digitally. We're saving thousands of dollars in business travel. All of the tools we use, the DocuSigns, the CrowdStrikes, the Shopifys, these have made our businesses far more efficient. We've cut back 15% of the rent we use in headquarters. And in my companies, we've budgeted Q1 and Q2, and we've slashed business travel by between 20 and 50% because we don't need it anymore. And so there you have an opportunity to, instead of making 15% pre-tax, you can make 18%. So I'm not worried about business in America. I'm worried about people in America. So I'd much rather have a stimulus package that gives individual checks or extends unemployment benefits for the next 14 months. The idea that the government can pick winners and losers in businesses is clearly been demonstrated to be false. So I'd like to stop them from investing. Why do I want to bail out the shareholders of an airline when really it should go bankrupt? The middle name of airlines is bankruptcy. They do it well every 7 to 10 years. Let them do it again to downsize, because I don't need them. The S&P doesn't need them. We don't need to fly everywhere anymore. We can do it on a Zoom call, or we don't have to go to an international location. We can meet the buyer online, and that's a great thing. So I want to take care of the flight attendants and the people that used to work at those airlines, but that's just one sector of the economy. Do I want to buy into a movie theater chain? No, it's going to zero, but that's okay. They're the buggy whips. Those are the old economy. We have a new digital economy coming that's going to be fantastic, and that's why the market's hitting new highs. Winners, losers. That's capitalism. But people we got to care about.
Before we let you go, on a personal note, you're looking ahead to 2021. Any particular New Year's resolutions you've thought about yet?
Well, the big sector that I'm really investing in, I've sold a lot of real estate, commercial real estate assets. That used to be 31% of my portfolio. It's down to 8%. And I'm redeploying that capital into healthcare, consumer, and technology. And in healthcare, the one that has really been the new sector that's emerging is been on using psychedelics as medicine. There's a lot of excitement there because we haven't had new medicines for depression and alcoholism and opioid addiction for 30 plus years. And all of a sudden on the election, if you saw what happened in Washington, D.C. and Oregon, they made legal the pursuit of psilocybin as a medicine. So I've invested in that in a company called MindMed. It has a very broad portfolio of trials, stage 1, stage 2. And lots of molecules that they're looking at to discover new medicines in. I'm not into this for recreational drugs. This is the pursuit of medicines in an area that was first done in the early 60s that we've forgotten about, including LSD. And I think this could be really game-changing, and the market is really interesting in this space. So that's one of my big new areas of investing, and MindMed's been one of my best outcomes since I invested in it, I think 24 months ago. I think it's up 700%, so I'm pretty happy with it.
Yeah, I'm looking at the chart right now, up 215% year to date. We actually had MindMed's CEO on just a few weeks ago. He talked about how he tried to convince you to invest. So we'll see how this does for you in 2021.
Yeah.
Kevin O'Leary, best of luck with the new app. It's called Beanstox. Great to see you.
Thank you. Take care.